Welcome back to the channel, everyone. Today, we're tackling two hot topics that are reshaping the financial landscape in 2024: mortgage rates and inflation. These issues affect not only home buyers and homeowners, but also anyone managing their financial future. By the end of this video, you'll have a clearer understanding of how mortgage rates are influenced by inflation and what this means for you. Whether you're buying a home, refinancing, or just trying to navigate the economy, we've got you covered. Let's dive in. The current state of mortgage rates. First, let's talk about mortgage rates. After hitting historic lows during the COVID-19 pandemic, where rates were often below 3%, the landscape has changed drastically. In 2022 and 2023, mortgage rates spiked to levels we hadn't seen in decades, at one point crossing the 7% mark. Entering 2024, we've seen some easing, with rates for a 30-year fixed mortgage hovering around 6.6%. Now, while 6.6% might still seem high compared to the ultra-low rates of recent years, it's important to understand why this is happening. The Federal Reserve's focus on controlling inflation through interest rate hikes has been the main driver here. By increasing interest rates, the Fed aims to slow down borrowing and spending, which in turn cools inflation. Unfortunately, this has also made borrowing, whether for homes, cars, or even student loans, more expensive for consumers. How inflation influences mortgage rates. So why does inflation have such a direct impact on mortgage rates? It's all about purchasing power and economic stability. When inflation is high, the value of money decreases, and prices for everything from groceries to fuel go up. To fight inflation, the Federal Reserve raises interest rates, making borrowing more costly. This reduces the money supply and slows down demand, which helps bring prices back under control. However, these interest rate hikes don't just affect short-term borrowing like credit cards or car loans, they also impact longer-term loans like mortgages. Higher inflation means higher mortgage rates, as lenders want to ensure their money maintains its value over time. Even though inflation has begun to slow in 2024, the effects of these rate hikes are still felt in the housing market. Prospects for mortgage rates in 2024. What can we expect for mortgage rates for the rest of 2024? Experts are cautiously optimistic. The good news is that inflation appears to be moderating thanks to the Federal Reserve's aggressive policies. Gas prices are stabilizing, and consumer prices for many goods are starting to level off. If inflation continues to fall, the Federal Reserve might start to ease off on interest rate hikes. This could lead to a gradual reduction in mortgage rates. However, it's important to remember that mortgage rates don't follow a straight line. They fluctuate based on market conditions, Fed policy, and global economic factors like oil prices, geopolitical tensions, and even climate-related events that affect supply chain. For those considering homeownership or refinancing, this means that while rates could drop, they may remain relatively high compared to pre-pandemic levels. Timing will be crucial. Is 2024 a good time to buy a home? So, is 2024 the right year to buy a home? It's a tough call. On one hand, mortgage rates, while still higher than they were in 2020, have stabilized and could drop further if inflation continues to decline. On the other hand, home prices are still elevated in many markets, although there are signs that prices are cooling. For first-time buyers, it's all about balancing interest rates and home prices. If you plan on staying in a home for a long time, say 5 to 7 years, it might make sense to lock in a mortgage now while rates are lower than their 2023 peak. You can always refinance if rates drop significantly later on. But if you're unsure about your financial stability or the high home prices in your area, waiting for better market conditions might be the way to go. Refinancing doesn't make sense in 2024. Now let's talk about refinancing. If you already own a home, should you refinance in 2024? It depends on your current mortgage rate. If you locked in a rate during the low interest period of 2020-2021, you're probably sitting comfortably. But if your rate is above 7%, refinancing could save you hundreds of dollars a month. Refinancing makes sense if the rate reduction can offset the costs associated with it, like closing fees and other charges. And remember, you don't want to extend the life of your loan unnecessarily. If you can refinance from a 30-year loan to a 15-year loan without drastically increasing your monthly payments, that's often a good move. Keep an eye on the economic trends. If inflation cools further, you might see better refinancing opportunities later in the year. Key takeaways and tips for 2024. Before we wrap up, here are a few takeaways and tips for navigating the housing market and mortgage rates in 2024. 1. Monitor inflation closely. As inflation slows, mortgage rates could ease, offering better opportunities for home buyers and refinancers. 2. Boost your credit score. A higher score could secure you better rates, potentially saving you thousands over the life of the loan. 3. Consider ARM's adjustable rate mortgages. These can offer lower initial rates, but be careful of potential rate hikes down the road. 4. Watch the housing market. In some areas, home prices are cooling off, which could make up for higher mortgage rates. 5. Stay flexible. Don't rush into decisions. Mortgage rates and inflation are unpredictable, so keeping an adaptable approach is key. Stay informed, plan ahead, and make smart financial decisions for the long term. That's the best way to navigate the uncertainty surrounding mortgage rates and inflation. Thanks for watching. Mortgage rates and inflation are constantly changing, but staying informed will help you make the best decisions for your financial future. Don't forget to hit the like button, subscribe, and drop your thoughts or questions in the comments below. We'll keep you updated on all the latest financial trends right here on the channel. See you next time.